smart money versus retail? How small volume in afternoon session affects the price? Understand the game better to get the odds on our side. You know that smart money, the hedge funds, do not always make money. The Omicron fever volatility deals hedge fund worst money returns since March 2020. Hedge funds are down an estimated 1.6% to 2% in November, according to early data from an industry research firm. The smart money doesn't always win, but they do know the game better. AMC Gamestop mimic stocks have led to a lot of retail traders making a lot of money. But we know that short sellers make a comeback as mimic stocks buckle. I'm not saying that the Chinese tech stocks are mimic stocks. They are clearly not. Just look at Tencent's, NetEase, Xiaomi's revenue growth year-on-year figures. Plus, all these companies have solid balance sheet. But hedge funds have been in this industry and the financial markets for many years. And they do know this game a lot better. Plus, they have the momentum quants behind their back now. You recall this news, there's a rebalancing of funds by quant funds into cyclical equities back in March 2021. While the rule-based allocation styles come in many shapes and sizes, these traders and the momentum quants will typically go into momentum trades, formulating their algorithms to their favor to catch up market changes. And we know that rule-based formulas and execution codes in the algorithm led to stronger trend setting in. What they can typically do is to use critical price point pressure like breaking moving average to cause more retail investors and traders to panic. Let's look at Tiger Broker's one-day price chart. When you try to break 4.75 by the retail investors to push the price up, there's more volume here to actually drag down the price coming down. Isn't it incredible? Using small volume to pull down the price. Just what I said earlier, based on my many years of observing, retail investors typically exhaust their purchasing power in the first hour of trading or in the morning session. See this intraday chart of Xiaomi for the first 2 hours? The first half an hour of trading has already exhausted a lot of retail chips. Lower volume with lower asking price has been laid out subsequently in the later morning session to pull down the average price. And see this intraday chart of Bilibili US shares for the US trading afternoon session. And you see that ultimately it's how the afternoon session affects the price. But most retail investors are able to control their purchase to buy in the later afternoon session. Whoever has more resources and making the move at critical price point and later afternoon section will determine the price direction in the day. So what can retail investors do? Who are we pitting against? The smart money is everywhere in US, Europe, China, Asia ex-China, and others. And the smart money have various strategies like long only, long short strategies, quant, meaning quantitative investing and trading, and special situation like M&A situation, arbitrage situation, and distress situation. And for the retail, typically only do long only, meaning buy shares, or long short, meaning they buy shares or they short sell shares. As for the characteristics of retail investors, they typically buy in the morning session. Inexperienced retail investors will also hold on to their holdings. For those who don't cut loss early, will typically cut loss late when the unrealized losses hit more than 30%. For those who set stop losses, will usually get stopped out as the hedge funds knows the typical stop loss price level and intentionally push the price to hit the stop loss level. With the hedge funds, quants, and momentum traders on one side, the retail investors who do dollar cost averaging will find themselves sitting on bigger and bigger position size. So, what can retail investors do? The reason why GameStop saga caught so much attention is because this group of retail investors band together. But this is very difficult to happen. Remember the game's theory, prisoner's dilemma, where two completely rational individuals would not cooperate even if it's their best interest to do so. Here's what I extracted from Investopedia. You can take a look. But to sum it up, if you cooperate, you will have more points. If you don't cooperate, you will have less points. I would not be surprised that certain hedge funds banded together on directional bets like short selling of particular type or securities. Now the Chinese tech block of shares are all hit. Is there a joint action against Chinese tech now? What would I do if I owned all the retail funds? Now what I mentioned, I will avoid typical stop loss level that parties can intentionally hit it to trigger a panic. If one want to buy equities, I would want to buy those equities with strong balance sheet and good growth prospects, and also buy these companies in the afternoon session. Short sellers will continue to capitalize on negative narrative like asset tapering, interest rate hikes. The downward pressure momentum will only reverse if something drastic happens. If the equities fall into deep value and long-only funds and retail investors have all acquired a significant percentage of the free float, plus not lending their shares to short sellers, then there might be a chance for reversal. If I control all the retail funds, I will only buy in the afternoon trading sections for all the good companies with solid balance sheets and growth prospects, like what I mentioned earlier. Given that downward pressure is still strong against growth stocks and Chinese tech stocks, good choice of selected tech stocks at right pricing is important. I will not overpay, and even if I add shares now, I will add slowly. It is same for Chinese tech stocks, as the bear speculators are jumping on every chance to short sell high tech growth stocks and Chinese tech stocks. Just to sum up these videos, here's are some price charts starting with Robinhood, Cloudflare price chart, Grab price chart, PayPal price chart, Futu price chart, and Tencent price chart.
As always, this should not be construed as any investment or trading advice. Do stay tuned and subscribe to my YouTube channel so that I can be kept updated promptly when I release new videos to reflect the changing market conditions.